Hello and welcome to Kemet Capital, a community of holders and seekers of African capital. I'm your host, JS, and before we start, guys, you already know it's our word of affirmation, our guiding principle. Our public service announcement is a Carbon Douglas production function, guys, on our way to make Africa great again. It's through economic power, economic might, and in order for us to achieve that, we need to produce more in a more efficient way. All right, guys. So today we're going to react to this video pertaining to means of exchange in general on the continent. So let's jump in and react as we go along.
Perhaps more than touching, just given how important it seems they are becoming to the global finance ecosystem. They were once seen as a risky side of crypto, but are now one of the fastest growing areas in global finance, it would seem. The US has also passed, you would know, the Genius Act, giving them regulatory backing, and transaction volumes are said to have overtaken those of Visa. So what does this shift mean for the dollar's dominance and for Africa's financial markets as well? To discuss, I'm joined by Robert Price of Sound Money, as well as Gillian Darko of Yellow Card. To the both of you, thanks so much for your time. So, Rob, I mean, this discussion just sparked by an article that you sent our way, and thanks for us, in which you talk about stablecoins being described as the dollar's second lifeline, in quotes. So maybe just unpack that for us and why you believe that stablecoins are now becoming so much more important for the global financial ecosystem rather than just being a workaround for crypto.
All right, guys. So as an introduction, let's discuss a little bit what are stable coins, right? So stable coins, it's a currency that is designed to maintain the value by pegging that cryptocurrency to a basket of assets. Usually, it's another currency like the US dollar, the euros, a commodity like gold, or another crypto currency itself like Bitcoin and Ethereum. So, unlike the latter Bitcoin and Ethereum, whose prices fluctuate widely, from day to day, from hour to hour, stable coins, they aim to provide price stability, making them more practical for everyday use payments and a store of value. So there are four types of stable coin. So you have the fiat collateral stable coin. So they are backed one by one by flat currency. So like regular currency, the US dollars, euros, and so forth. So those currencies, they are held in reserve. So that means they are bank deposits. So an example of fiat currency stable coins, you have the USDT, the USDC, and the BUSD. So those are example of collateralized stable coins. So the second type is crypto collateral stable coin. So those are backed by other cryptocurrencies, usually over collaterals to manage volatility. Over collaterals meaning that if you have $100 of stable coin, you need, for example, $120 of cryptocurrency. So that's the over collateralization right there. So an example is DAI by market DAO, and it's backed by Ethereum. The third type of stable coins are algorithmic stable coins. So those are not backed by collateral. Instead, they use like contract and algorithms to adjust supply and demand and to maintain the peg. Then an example is UST, Terra USD. It collapsed in 2020. So those actually algorithmic stablecoin, they faces an event called a death spiral. So a death spiral is such as the tightening of global liquidity, leading to heavy redemption of the stablecoin, causing the supply of the link token to increase exponentially, further causing a decrease in price. So that can be, as the name imply, a death spiral. It can go very bad for holders. So the fourth type of stablecoin are commodity-backed stablecoin. Those are pegged to assets like gold or oil, and you have like Paxos gold and Tether gold as an example of commodity back. So why stable coins matter? They matter because they provide a bridge between crypto and traditional finance. So this provide liquidity and an on and off ramp to fiat currencies. Also, it helps for remittance and cross-border payments. It's faster and cheaper than bank or money transfer operator. You have to understand that us as African seekers and holders of African capital. Let's say you have an industry that you're working on. You have a factory and you need to buy machinery using stablecoin. Here, let's say you are in Uganda, you can use your stablecoin and purchase that machinery from China using the stablecoin, bypassing you know the historical intermediaries that are banks and usually foreign banks when you do international transaction. A better example, it's like in French Africa, because in French Africa, when you want to make a large purchase, you need authorization from France to give you enough euros so that you can go purchase your goods like elsewhere in the world, in China, Japan, and so forth. So with stablecoins, you bypass the colonizer. You can go straight to the vendor, buy the goods that you need, and ship them back to your country. So that reduces the intermediary, reduces the friction in the market, and improve efficiencies. So I'm not arguing about cryptocurrencies in general, but this stablecoin is a game changer for us, guys. A game changer instead in terms of transaction remittance, as we mentioned here, cross-border payments. Another element why stablecoin matters is the DeFi ecosystem. So it's a power lending, borrowing, and yield farming in decentralized finance. So you can also access funds through those stable coins. And the final element why it matters is inflation hedge. In country with volatile currencies, stablecoin like USDT act as a sort of store of value. So that's for stablecoin, and we're going to continue to discuss as we go along the risk and the concerns, and also the adaptation globally with the Genius Act that's going to be discussed in this video, I'm assuming.
Yeah, thanks, Fifi. Yeah, absolutely amazing innovation that's come out of crypto. A challenge that crypto traders had, and they wanted to be able to settle 24 hours a day, 7 days a week in a truly global fiat asset. And the reality is that dollars weren't that way before stablecoins. But now you've got stablecoins, the ability to settle 24 hours a day, 7 days a week, actually be able to also trade peer to peer. So it's a phenomenal innovation. We're seeing at the moment how it is sucking traditional financial market players, numerous payment companies, PayPal, Stripe, adopting stablecoins, and as well as the U.S. government. That's quite an incredible change that we've seen over recent months. The previous administration was very negative towards crypto, but that has shifted, and part of that is seeing how these stablecoins are actually a major buyer of US debt. So it's quite a shift, and it's also important to note that it of course is drawing more and more people into crypto, into truly decentralized non-state assets over time.
Sure. On the a shift in the U.S. Administration or U.S. government's position on stablecoins, notably under a new administration, I mean, you're making reference to the Genius Act in your article. Do you reckon the legitimacy that the U.S. Government has given stablecoins right now to spread across other regions in terms of how other governments start to look at or are already looking at stablecoins?
Okay, so the Genius Act in the US, I mean, Americans, they're so good with those acronyms, guys. They're so good at it. Follow, be on the lookout. They have orders, President of the United States, Flores, First Lady of the United States, Chorus, Supreme Court of the United States. I don't know how they come up with those acronyms, but they always work out. Like they have the JAG, just another guy. Yeah, they I mean, some unbelievable how they are able to come up with those acronyms, because the latest one is the Genius Act, and Genius stands for Guiding and Establishing National Innovation for US. i mean this is brilliant. All right, like stop playing. So the Genius Act So it's a landmark legislation establishing the first federal regulatory framework for US dollar pegged stablecoins. So this is huge, guys. It was signed into law by President Trump on July 18, and concerns remain given Trump's, crypto holdings. So the guy is a genius, right? He passes the law that will make him richer. I love him. So members of the Congress and senior government officials are barred from profiting from stablecoin issuance, though notably not the president. So the president is not barred. Donald Trump, I love you, man. So stablecoins must be backed one by one by US dollar, one to one, by US dollar or low risk assets, IG short term treasuries. Issuers must publish monthly reserve composition validated by independent auditors. So critics warn that it may be too permissive, potentially allowing reputable but flawed issuers to operate freely. Example like Tether, previously fined for misleading reserve claims, may still benefit from this act. So what's very important for the US is that now that they are, fighting with China, China is reducing its purchase of US debt. But then US is looking for new customers. So they come up with the crypto because for stablecoins you need to be backed either by actual cash or by treasury debt. So that means stablecoins are big purchasers of US debt, and that's why they want to diversify their customer base since China and other regions of the world are dumping US treasury bonds or T-bills and so forth. So it makes sense for them, for the US at that, to move into a new market, have a new have a new customer base for their debt. So all in all, it's a win-win for the US to have this policy implemented, or this act signed into law, enacted into law.
Yeah, it really is a big deal. So, I mean, maybe just, pulling back the lens very briefly there, there's lots of different types of stable coins, but the market has gravitated to fully reserve back stable coins, where the stablecoin issuer is holding the underlying assets, the underlying T-bills, treasury bills behind the scenes. And so the US government, for me, it was always a no-brainer that eventually they would support this, because the
Yeah.
US government is highly indebted. They're struggling to narrow the deficit. We've seen that again this year. They need external buyers of their debt. And at the
Mhm.
same time as they're struggling with these challenges, the biggest holders of US government debt, Japan and China, they were selling down on debt last year. And in 2024, Tether, the largest stablecoin issuer, it was the eighth largest purchaser of US government debt.
That's the eighth largest. That's huge. We're talking about US debt. We're talking about trillions of dollars. That's huge to have a stable coin provider, purchases of US debt. That's a big deal.
So you can see here why the US government is like, well, this is an important player. And I think it also is important for the longevity of the policy, because you could, of course, make the argument that a new administration could change the tune. And listen, they could very well change their tune on crypto. But with regards to stablecoins, I think it's very unlikely, because of this aspect of having a buyer for their debt from the stablecoin industry. And I think maybe you're touching on this, but it's also useful to note that stablecoins are dominated by the US dollar. So that we do have stablecoins in other currencies. We have rand stablecoins, euro stablecoins, Japanese yen stablecoins, numerous other stablecoins, but the dollar dominates the stablecoin market to a far greater degree than other currency markets.
Sure.
So this is also a useful tool for the US government to promote US dollar reserve currency status. And of course, that's in the interests of the US government. They like that. They want US dollar reserve currency status. So further reiterating their support of the stablecoin industry, and therefore the crypto industry as a result.
Sure. Gillian, to bring you in here, and maybe if you can also just give us the African perspective in terms of what you are seeing on Yellow Card. I mean, you also operate at the heart of the continent's digital financial store.
Guys, just to reiterate, right, the Genius Act, it's important for the cryptocurrency in general because it provides clarity, by bringing much needed structure for a largely unregulated market. It also gives consumer protections. It introduces the Genius Act at that introduces transparency, reserve standards, you know, ethics, safeguards, and so forth. Also, financial stability. Because the stablecoin, as the name is implies, is designed to support financial institutional adoption while maintaining oversight because banks and other financial institutions they like stability and also market expansion. This will bring more people into the crypto currency world. Open path to banks, fintechs and retailers to even issue stablecoins under regulation. That's huge, and it provides a solid framework as the US is the leader in the financial market in the world. So if they have adopted the policy with the Genius Act or the asset in general, the crypto assets, that bodes well for the rest of the world and sector in general.
Just this dominance, this popularity, the legitimacy that we are seeing across the US. So how has that, in your view, translated to what's happened on the continent as a result?
Yes, I agree with what Robert's saying that stablecoin traction, it's moving quite remarkably. This
Mm,
summer, I refer to it as the year of stablecoins, and recently Goldman Sachs report also says the same. But what we're seeing on the continent is we're seeing a massive the utilization here. So if you look back, the World Bank has stated that about 350 million we have 350 million unbanked adults in sub-Saharan Africa. And with the movement and traction of stable coins, we're seeing, even from a chain analysis crypto adoption index, that 15 of the top 20 markets are in emerging economies. Nigeria is actually seated there as number 2, just behind India. We are
wow.
looking in terms of yellow card, we're seeing the usage in Africa, where we're seeing use cases for the following, where it's merchants paying suppliers, individuals using it for savings and paying salaries. In sub-Saharan Africa, 43% of all crypto volumes are stable coins. So I touched on
Wow.
Nigeria where it comes to
Yeah.
the chain analysis, global crypto adoption, where they are noted as number 2. Nigeria did 225 million USD in stablecoin transactions, and this was a period from July 2023 to June 2024. In South Africa, it's 5.8 million crypto users, and stablecoin use growing 50% month since October 2023. So we are definitely seeing the use case for this.
Um, and that's great, guys, because this is an innovation that we need to take advantage of. As African, we are most of our market are excluded from financial system flow of money in general, like international flow of money. In order for us, I'm talking more for French Africa, since our currency is still managed by the colonizer, it's very difficult for us to make large purchase without their, as I said in the beginning, without the approbation, without the approval of the colonizer. So you want to purchase like a one, two, $20 million worth of equipment. The Bank of France is not going to let you do that like just like that. They need authorization, they need like a lot of resources and a lot of documentation just for a transaction. That reduces the efficiency of the market because you need your goods, your machinery as fast as possible. If only to make that purchase you have to jump through holes and loopholes and you know it becomes more difficult, it becomes less efficient. So the adoption of stable coins in sub-Saharan Africa, in Africa in general, and in developing countries, that will be a game changer for us, guys. That will be a game changer. We'll be able to bypass those, um, you know, Western financial institutions and go straight business to business, customers to business to customers. And guys, I'm all for it. I'm all for efficiencies. I'm all for ways for African to get into the global financial market, and this will get us there. these stable coins will help us for sure.
Technology. And the reasons for that is quite simple. On this continent, we need this technology because there's the issue of the currency depreciation. There's an issue where you are trying to hedge against that volatility. And as the population continues to grow, you have a tech savvy population as well. This technology is allowing businesses and individuals to be able to remain competitive.
Yeah. So I mean, Gillian, you're talking about quite a strong adoption there, quite strong use cases you gave us example of. So does that mean that trust is not an issue here? The sort of risks are not material in terms of the level of adoption and use cases?
I mean, it's not because it's called stable coin that it's going to be stable, on the flight line. Even the currency that the stable coin, even the currency that is stable coin has a volatility, though the volatility can be lower due to the fact that in order for you to issue the stable coins, you need to actually hold the reserves. So you are the one setting, by doing that, you're kind of flattening up, the volatility in the peg currencies. But stability is not a give, it's not guaranteed. There still be a fluctuation, but it will be less volatile, basically.
That you've seen here?
I wouldn't say that trust is not an issue. I would say that the use cases and the need for a technology where you are able to make payments is top of mind. But if you
Yeah.
actually look at the regulatory environment in Africa, I boldly will say that we are moving quite quickly. So as you've seen what is happening in the SADC region, and even looking at Yellow Card was one of the first to be licensed in this industry. We have a license in Botswana as well as a Cat2 license where in South Africa. We're seeing leaps and bounds that is happening in Nigeria. Ghana just issued out its own regulation on this effect as well. What we do is we work very closely with the regulators here. So answering your question again, the concern for a number of users here is the efficiency of this technology in order to solve their immediate problems. It is no longer theoretical on this continent, and in the emerging
Hmm.
markets, it is focused on how quickly can this be done instantly and the accessibility to that liquidity. So the
Right.
regulators are paying attention, they're ensuring the protection of the consumers, and they're ensuring that the risk are adhered to, ensuring there is not a lot of systematic risk.
Yeah. Rob, yeah, please go ahead.
Just almost to pinpoint what you mean also by risk, because I mean I'm sure Gillian will concur that if you're thinking from a user perspective, you're comparing. People historically might have got physical dollars, cash dollars. They might have to be going into black markets to be able to get hold of those cash dollars. Then you've got to store them. What kind of premiums you're paying on top of getting hold of those, and then how are you actually going to transact? Obviously, you've got to then do it peer to peer. You can't actually do that over any distance, the other side of the city, the other side of the country, the other side of the continent, the other side of the
Correct.
world.
Correct.
Significant reduction in risk by using a digital substitute, which is, and then obviously from an actual issuer perspective, of course you can, of course, certain issuers will be risky, and you do need to be aware of that. Things that there have been problems in the stablecoin industry in the past, and we can't kind of hide away from that. But if you do go to the largest issuers, places like Tether, places like USDC, well, I think there's high degrees of confidence in the underlying reserves that are held by these institutions, and significant balance sheets. And so, listen, there's always risk, but I think the risks are significantly lower relative to what people historically were using.
Right. So just on that point, Rob, you're also talking about stablecoins as a potential as being a bridge to Bitcoin. So talk to us about that path realistically, and whether you reckon now that adoption for Bitcoin and perhaps even other cryptos is significantly or is likely to be significantly boosted as a result of what's happening with stablecoins.
For sure. For sure. 100%. You already have the Genius Act. And the Genius Act provide like a base framework for regulatory principles that worldwide. So from that same vein, cryptocurrency in general, it's going to be more popular, more democratized. People will feel more comfortable using them. The understanding of the crypto education of the population will just go higher and higher with the adoption of stable coins and the democratization of the industry.
Yeah, I think this is a nuanced point, but it's a very important one. Now, clearly, stablecoins are useful and valuable. We've just spoken about that, so I'm not. I obviously agree with that point, but at the same time, stablecoins are still the U.S. dollar. The US dollar is part of a monetary system, as we said, that has a significant amount of debt, very low interest rates, and continuingly wide deficits. We do expect the US dollar to depreciate against scarce assets over time. We've seen that historically. We should expect that going forward. You see that in the price of equity markets, the price of property markets, the price of gold, the price of Bitcoin. So yes, stablecoins clearly are going to be adopted and are hugely valuable, but they're not Bitcoin. And also once people have access to stablecoins, they are already moving into the crypto markets. They might be
Mhm,
utilizing crypto wallets that creates familiarity.
mhm.
So clearly, then people might be thinking, okay, what else? Where can I actually long term protect my value?
True.
Yes, a dollar might protect my value against Nigerian naira or against Turkish lira, but dollar doesn't protect my value particularly well against property markets, against gold, against Bitcoin. And also, we've mentioned this already, but of course, the regulation for stablecoins further legitimizes the broader crypto industry, and that's a powerful force for further adoption.
Yeah, and it's on
So,
that regulatory point that, Gillian, perhaps we wrap up the conversation for now. I mean, plenty of time to talk on another occasion, but just given how the US government has legitimized stable coins, when you look at the path for regulation on the continent, how do you see it playing out? I mean, and especially just given the fact that we know that our leaders are trying to do away with, not necessarily replace the dollars, but there is a drive for the usage of own currency. So just
mhm.
as you see it, the path of regulation following legitimacy from the US in Africa, what do you or how do you see it unfolding?
So, answering your question, in Africa, regulation is evolving very fast. Like I touched on already with Nigeria, you're seeing Kenya, and obviously with South Africa, it's moving towards a clear digital asset policy. And Robert, actually, to quote you, I recall you saying that stablecoins are centralized, so heavy regulation is still possible. And you expect the industry and regulatory standards to be imposed a little bit further. So, what we are seeing is there is a movement, there is a concern, especially with the digitalization of the dollar, where there's a question of sovereignty. But stablecoins are not designed to replace sovereign currencies, but to digitally and extend them. So, from a regulatory lens, where it comes to what is happening on the ground, they are looking at the possibility where governments as well as fintechs are working hand in hand together. So we are seeing even across the world that there's several forms of stablecoins that are taking place. You have seen that you have the Euro stablecoin. You've got in Brazil the likes of the BRL backed coins. You've got Hong Kong's pilots in Hong Kong. HKD pilots in Hong Kong as well. So this shows that the future is multi-currency stablecoins and not competing
Mm.
against fiat. So that is the same, you can say, position that we're seeing in Africa as well. Is how do you work with the fintechs? How do you ensure that you continue to be competitive?
Yeah, and Robert, I know that you raised a point also around stable coins and what this also means for a few central bank digital currencies that are being pushed as well, but maybe something that we pick up on another occasion. But thanks to the both of you. It's not a topic that we speak about often on the channel, but thanks for making us a little bit more wiser in respect to what is going on in this ecosystem. Robert Price, the CIO of Sound Money, as well as Gillian Darko, Vice President for Strategy over at Yellow Card.
Hi guys, coming to the end of the day of the video. Interesting conversation as well, even for myself, discovering, the cryptocurrency world in it, but to have the stablecoin, a better understanding of exactly how it works. So my takeaway is that it needs to be adopted, guys. Stablecoin, they are the future for us. It will enable us to, facilitate cross-border payment transactions, improve efficiencies in business settings. Also, on a household level, you can save money using cryptocurrency. you can, transfer to different nationality, different part of the world. So has to be adopted. It will be a big efficiency boost for our economic development that we are seeking here in this community. So you guys let me know what you think in the comment. I'll see you in next one. Be safe out there. Bye bye.